Another day, another video. 3 days in a row. Can I get a like? You know what's pretty exciting? Bitcoin has been more stable in the last 3 months, or nearly 4 months, than what else? NASDAQ, the Dow, and the S&P 500. This is really cool if you are more involved in Bitcoin for the commerce aspect rather than the trading. I can say the same about myself, but I also recognize that Bitcoin's price needs to get higher before more people are interested in it for commerce, so they're kind of one and the same for me. That's why you'll hear me talk a lot about moon boyish stuff, because they are one and the same. At least I like to think so. Now, that is certainly cherry picking. We don't want to look at year-to-date stats for Bitcoin. No. Stop that. Year-to-date stats, though, for the previous year. Noise. Bitcoin has been married essentially to volatility since its inception in 2009, although in its lifetime has never really been tested against a wider market recession, with conditions currently ripening for a recession at some point soon-ish. That could be a very interesting test for cryptocurrency. Now, don't get me wrong, I do not think that people losing their jobs, getting bankrupt, or just generally struggling to pay for bills is a good catalyst for a cryptocurrency pump. That isn't. Just want to clear that up. This would be more for the super elite, those that have assets and are looking to protect what they have, although anyone with assets is technically included. Almost nothing is safe during a global financial crisis. Interest rates are usually higher than they should be, so holding fiat is out. Did you say fiat? No. The housing market, the stock market, you name it market, is a bloodbath. So why would cryptocurrency be any different? Well, it may not be. Just want to get that also out there. Could be a bloodbath too. But Bitcoin has been referred to many times as digital gold, and until further scaling solutions are implemented, that moniker essentially is a correct one. Gold itself had a bull run during the last Great Recession in 2008. It only ended when traditional markets recovered a few years later. I'm starting to notice some correlation here. But instead of what we have with gold, when 90% of the market volume is from the US, London, and Shanghai markets, we truly have a global marketplace in cryptocurrency, where almost every country in the world can easily participate in cryptocurrency investment. My opinion is it's just far more convenient than buying gold. It is also the opinion of many others. This is where things could go absolutely crazy. This is why people are talking about $250,000 Bitcoin and higher. This is what they're referring to. So in an attempt to give a balanced argument here, what are some things that could nullify this reasoning? Let me know your thoughts. I'm sure there's more than a few. One, though, that really comes to the forefront of my mind is old people. It's the generational technological gap. I believe that's a term. The older generation doesn't know about, doesn't understand, is scared of things that change their understanding of the world. Most of the world's money is held by the older generation, I think. It's hard to really know for sure. Cryptocurrency, though, is very much dominated by the younger generation. This could be a small problem. It could be a very large problem. Either way, though, the problem is solved with time. So whether there's no moon pump in the next recession, maybe the one after that, like, comment, and sub it up. I'll see you again soon.